To address the issues of unclaimed deposits, inoperative accounts and frozen accounts due to pendency of KYC updation, banks have been advised very recently once again to take necessary steps urgently to bring down the number of such accounts and make the process hassle-free. Further, banks have been advised to segregate the accounts of beneficiaries of various central and state government schemes through direct benefit transfer, that is DBT, and facilitate uninterrupted credit of the DBT amounts into their accounts, and also utilization of the DBT amounts by the account holders. And we have advised the banks to do it without inconveniencing such vulnerable segments of customers, because the DBT beneficiaries are usually, and they are the vulnerable sections of the society. So being fully mindful of that, we have emphasized that there should be a kind of a seamless and smooth flow of DBT amounts into the bank accounts of such individuals in a situation so that it facilitates the individuals to withdraw the money to meet their various requirements. Progress made by individual banks in this regard will be monitored by the Reserve Bank. I would now like to turn to the external sector. The statement today is a bit, because we have too many announcements, so I request your continued patience. External sector. India's merchandise exports expanded at a 28-month high pace in October. Merchandise imports also increased for the 7th consecutive month. Services exports sustained buoyancy and posed double-digit growth in second quarter as well as in October 2024. The robust services exports, together with strong remittance receipts, are expected to keep the current account deficit within sustainable levels during 24-25. On the external financing side, gross FDI to India increased at a robust pace. I'm talking about gross. The gross FDI into India increased at a robust pace during the first half of the year. Net FDI, however, moderated during this period due to higher repatriations and rising outward FDI. Foreign portfolio investment, that is FPI inflows to EMEs have generally declined in October. Net FPI inflows to India stands at $9.3 billion so far in the current year, that is from April to December 4th. And this was supported mainly by inflows in the debt segment. External commercial borrowings and non-resident deposits, on the other hand, witnessed higher net inflows compared to the last year. India's external sector remains resilient, as reflected in various key indicators where India has been consistently performing well. And the key indicators and the data they are given in the footnotes. In order to attract more capital flows, it has been decided to increase the interest rate ceilings on FCNRB deposits. Accordingly, effective from today, banks are permitted to raise FCNRB deposits of 1 year to less than 3 years maturity at rates not exceeding the ceiling of overnight alternate reference rate, that is overnight ARR, plus 400 basis points as against 200 basis points at present. So in addition to the overnight ARR, currently the banks are allowed a spread of 250 basis points, that is being increased to 400 basis points. Similarly, for deposits of 3 to 5 years maturity, the ceiling has been increased to overnight ARR plus 500 basis points as against 300 basis points at present. This relaxation will be available till 31st March 2025. I shall now announce certain additional measures. I again request your patience because the additional measures, they are very important. The first one relates to the FX retail platform, and this is how it is. The FX retail platform, which was launched in 2019, is now proposed to be linked with the Bharat Connect platform of the NPCI. This would enable users to transact on the FX retail platform through mobile apps of banks and non-bank payment system providers. This will expand the reach of FX retail platform, enhance user experience, and promote fairness and transparency in pricing with adequate safeguards. The second announcement relates to introduction of secured overnight rupee rate, SORR, a benchmark based on secured money markets. With a view to further develop the interest rate derivative market in India and improve the credibility of interest rate benchmarks, the Reserve Bank proposes to introduce a new benchmark, namely secured overnight rupee rate, that is SORR, which is based on all secured money market transactions, that is overnight market repo as well as TREPS. The third announcement relates to Connect to Regulate, an initiative for open regulation. As part of Reserve Bank's consultative approach in framing regulations, a new program, namely Connect to Regulate, will be launched under the ongoing RBI at 90 commemorative events. A dedicated section in the Reserve Bank's website will be made available for stakeholders to share their ideas and inputs on specific topics. So we will give out a specific topic on that. We are not going to upload a discussion paper or anything, but we will just mention the topic, and we would like all stakeholders to give their opinion, suggestion and thoughts to the RBI. So it is that makes our process of consultation much wider and much more flexible, which has been our approach over the last few years.